Welcome back, traders. It's Friday, September 29th, 2023. Time for a general market update. Again, a reminder, I'm an amateur individual growth stock investor, not affiliated with MarketSmith or IBD. So our agenda is to touch upon looking at the Qs, a few of the internals of the market, and then we're going to spend the bulk of our time breaking down charts. We're going to use the GMU Extra, the hack that I shared with you a month or so ago, and we're going to show how to use it. Then we're going to look at any changes in the trend, and then we'll wrap up. So let's take a quick look at the Qs today. We had the PCE report today. We had a little bit of a pop in the morning, a little gap up, but it's actually been fading for pretty consistently throughout the day. The bottom line is, we're really in a downtrend, which is lower highs and lower lows. We are now trapped below a downward sloping 50-day moving average line in red. And you can see we're still below the 20-day moving average. And we just had this little undercut of the prior low. Could this little undercut and rally turn into something? Yes, if we got a follow-through day. I think we'd need a really strong follow-through day to actually change the tide. But at the moment, we're still trending down. And you can see the up-down volume on the Qs is still below 1, showing net distribution. So in the internal side of the market, let's look at the NASDAQ new highs and new lows. New highs in green, new lows in red. You can see over the past month here, September, it's been accelerating to the downside with new lows. New lows have actually really reached a level that we have not seen, if you go across with this black line, have seen since May of earlier this year and the banking crisis back in March. So it's been pretty bad out there under the surface. We're actually at the levels that we had at the 2022 December retest. So not a good picture with accelerating new lows. Maybe this results in some capitulation and we bounce. I just put in the rally of this year really was in the months between May and July. We had that 2 to 3 month rally. You can see the new highs were expanding and the new lows were starting to dry up, but we're nowhere near that now. It's going in the wrong direction. This little chart on the inside here, this is the S&P 500 stocks, the percentage of stocks above the 50-day moving average. You can see here, we are down. Right now it's showing at 19, but we went below 15%. Only 15% of the S&P was above the 50-day, which is really pretty extreme. We have not been down at that level since way back over here. So it's we've reached some pretty extreme levels. Like I said, maybe we get a bounce here. The question is, will it be strong or will it just be a feeble attempt at bouncing? This is the NAIM, the Active Managers Exposure Index. It's a 2-week moving average of exposure levels. You can see here that we're currently right around just above the 40% level. I've drawn these zones I use. When it's between 30 and 60%, that usually happens during corrections, and that's what we're in right now. Green levels above 85%. Usually, though, those are getting extreme. And then the pink is really extremes at bottoms. You can notice that we got down to almost 10% levels at the bottom, right around in October of 2022. So we're in this correction range. Could it go lower? Sure, it's possible, but it's just good to keep an eye on it. Now, this is an interesting chart. This is about hedge fund positioning, and it comes from, I guess, Goldman Sachs. And it's looking at the net leverage ratio, the net positioning of funds. And what they're showing, which was really important, was we are at a record level of hedge funds being net short. This arrow is pointing to the drop that we've seen. And you can see we have not been in a situation where hedge funds have been this short since way, way back in 2020. So we're at a pretty extreme level. They didn't get this short even throughout all of 2022. So either the smart money is going to be having a big payday, or it starts to fool people and we end up going the other way. So right now, hedge funds are really short. September, we talked about it right on cue. We had the Fed meeting, and the second half of this month has been really a disaster. Very, very volatile and not a good situation. But I guess on the bright side, if we look beyond September in terms of seasonality, October tends to be a positive month. In pre-election years, though, it's been pretty modest, but at least maybe there's something to look for, that maybe the market bottoms here in early to mid-October. Now, I want to break down some charts. I really want to spend some time showing you the things you should be doing, or amongst the things you should be doing as you develop watch lists and you look for charts. So we're going to use the GMU Extra that I did a few weeks ago, where I had a hack. It was the 3 most important weeks in the base to quickly understand, does a chart show accumulation or distribution? And it's only the beginning of an analysis, but I wanted to show you how to use that. So I've got a couple charts here. This is Meta. Top is a weekly chart, then a daily. And here's Tesla on a weekly chart and then daily. So just to refresh everyone, if you haven't watched the video, and you should watch the video, the 3 most important weeks in a base to get a quick read are looking at the largest spread week in the base, looking at the largest volume week in the base, looking at the action at the bottom of the base, and a couple of other things. The first 3 weeks off the bottom, can the stock get into the upper half of the base? And to look at the handle, if it's a cup with handle. Is that handle formed in the upper half of the base? So let's break it down. Here's Meta, and here's what it's showing us right now. The largest spread in this base is red, so that's a negative. The largest volume week, this is slightly also, this is the largest volume week in the base, and it's red, so that's a negative. The action at the bottom of the base, we didn't get a huge reversal. It's still pretty much near the low, so it's really low in the range, not a good position. And then we look at those first 3 weeks off the bottom, 1, 2, 3. Did this push up into the upper half of the base? In Meta's case, the answer is no. Is the handle in the upper half of the base? Actually, when you draw the midpoint, the handle is kind of straddling the midpoint, so I'd consider that to be neutral. Same exercise with Tesla. If we look at Tesla, the largest spread in the base is red. It's negative. The largest volume week in this base, now remember, in the base, is still red. You can see it right here. The first week down was the biggest volume in the base. Now at the action at the bottom, we had a red week closing very close to the low of the range. So closing near the low is a negative. The push off the bottom, the first 3 weeks, you can see here, 1, 2, 3. We still are in the lower half of the base if you do the measurements. So that's also negative. And is the handle in the upper half of the base? Tesla's handle is actually extending into the bottom half of the base. So when you do the homework and do the measurements, it's telling you that this is not a quality base. So it's important to know that, particularly in the environment that we're in, which is not conducive to buying stocks, that this base has a lot of flaws. So let's look at some more. Here's CrowdStrike and Zscaler. So look at CrowdStrike. Now, CrowdStrike's interesting because it formed a little cup base that tried to break out, and it failed and got pushed back down. But then it formed another base currently that's kind of a cup base with a high handle. Shows a little bit clearer on the daily chart. You can see here, there's the failed breakout due to the market correction. But then we've pushed to form this cup with a high handle. So that's what we're going to analyze. So the largest spread in this base, it's blue. You can see it right here. So that's a positive. The largest volume week in this base is the same week right here. It's blue. That's positive. The action at the bottom of the base. So you can see here on the weekly chart, look at the bottom of the base. You can see this support week off the bottom. So that's another positive support week. 3 weeks off the bottom, the push off the bottom, what do we get? Well, the stock is definitely pushed up into the upper half of the base. Again, that's a positive sign. And where's the handle? In this case, the handle is being formed in the upper half of the base. This essentially, you could look at this as a cup that was trying to break out, but was weighed down in September due to the market forming this long handle, but the handle is still in the upper half of the base. So this base has promise. It's much more constructive than the Meta and Tesla bases. Now, Zscaler, kind of a similar formation with a cup with kind of a high handle. You can see it here. Now, you go through the same exercise. The largest spread is red. That's negative. The largest volume week is over here. That's positive. It's blue. And then you can look at the action at the bottom week of the base. So it's a kind of a mixed week. It's not widespread, but it also is closing a little bit off the lows. So I consider it kind of neutral. Then we look at that push off the bottom of the base. Weeks 1, 2, and 3, we're clearly in the upper half of the base, showing there is some power there. That's positive. And then we have a handle. And when you do the measurements, this handle is still in the upper half of the base. So CrowdStrike and Zscaler show more promise, and the group is actually acting a bit stronger. The software cybersecurity stocks have been acting a little stronger amidst all the chaos. So a couple more. DraftKings and Spotify. And I particularly picked some that look good and some that don't look good because, the ones that have a lot of red characteristics, you really, want to have them low, if at all, in your watch list. And you want to put the ones that are showing positive characteristics to the top of your watch list. Here's DraftKings, cup with handle base. Largest spread is red. Largest volume week is red. Action at the bottom of the base. You can see it's a wide spread closing pretty close to the lows. Not a great situation. It's red. 3 weeks off the bottom. This stock, you can see DraftKings had 3 weeks off the bottom with a good strong push. Got it into the upper half of the base, which was constructive. But then the handle has corrected too much, and it's actually back in the lower half of the base. You can see this clearly on the daily chart. The handle is actually approaching the lows of the base itself. So that's a flawed handle. Spotify, another cup with handle. The largest spread is red, negative. The largest volume week is red. At the bottom of this base, constructively, the range started to contract, but the close is pretty low. I'd consider it neutral. But we did get a good push. The 3 weeks off the bottom got it into the upper half of the base, which is a positive. And the handle in this base is actually straddling the midpoint of the base. So it's kind of neutral. So it's kind of mixed. Any of these charts could morph into something that's more constructive. But right now, some of them look good and some of them don't look good at all. Now, I wanted to highlight a couple stocks that are showing good relative strength. So these are stocks, these 3 stocks here, Nutanix, Dell, and Vertiv, have all had earnings gaps. And the earnings gaps formed a high volume close, which I've drawn here with a black line. And you want to look at that action post earnings gap. And you can see all of these are acting very, very well still. You can see Nutanix really has not closed below the high volume close on a weekly chart. Dell has stayed above the high volume close, very constructive. And Vertiv had a little bit of undercut of the high volume close, but on the pullback here, it's stayed above it so far. So that's all really constructive, good relative strength stocks. And you'll also notice that all 3 of these stocks, this is the accumulation distribution ranging from 1 to 2. We want to be above 1 to show accumulation. Vertiv's at 1.7, Dell is at 1.6, and Nutanix is at 1.3. So here's 3 constructive stocks showing accumulation. These should be stocks that are showing relative strength and high on your watch list. Duolingo at the bottom has formed a double bottom base. Looks like it wanted to break out, but it formed a handle here as the market has been really trounced the last 2 weeks. So they're really forming a double bottom with handle. I'll leave it to you to start to analyze that base in detail, but I think it's one you want to take a look at. More high relative strength names you should be aware of. The Financial Investment Management Group has been acting real well. And I've just got a comparison chart here. This gray line is the NASDAQ composite. And you can see since July when it peaked, NASDAQ has been trending down. But what we wanted to look for is the stocks that have been trending up during that period. And you can see that Apollo Group, Ares Management, and the CBOE, which I've got these mini charts for you, you can see how they have been outperforming the NASDAQ greatly during the past 2 months. Very, very strong. CBOE is not as strong. But what's really noticeable is all 3 of these stocks are in uptrends, getting support at their 50-day moving average in red. You can see it's been support, support, support all the way. And you can see the up-down volumes are all positive, showing net accumulation. So these should be on your watch list for entry points. And we're also watching if they were to break down. Couple of more strong relative strength names. Here's Carpenter Technology. I've talked about this a few weeks ago as something I thought was interesting. Make My Trip was on my list. And here's a new one, which is actually a late 2021 IPO, which I think has a pretty good story. And maybe we'll talk about it in more detail in a future video. But it's Remitly Global, acting really well in a very weak market. You can see big blue volume spikes is really encouraging. Again, all three stocks are trying to have a net accumulation above 1. And then when you stack these up against the NASDAQ from mid-July, you can see the NASDAQ in black is trending down. And you can see these three stocks, Carpenter, Remitly, and Make My Trip, have all been acting well. So they're showing really strong relative strength in a bad market. So I think you want to have these on your watch list if the market were to turn. So that was the chart breakdown section. Now let's look at the change of trend and if we're seeing anything yet. So we had the Fed meeting. We just had the PCE report this morning. The reaction was a little gap up to begin with, but it's been fading all day. We'll have to see how it closes. But the latest CME Fed Watch says that the expectation right now is 83% are expecting a rate pause in November, and 66% are expecting a rate pause to continue in December. Those are pretty confident numbers. We'll have to see how that plays out because there are some of the components of inflation that are showing to be sticky, meaning the Fed might have to raise one more time. But at the moment, people think they're going to hold things steady. What we're going through now is, really similar to Jackson Hole in August of 2022. When he spoke at Jackson Hole last year, he actually caused a 19% decline really pretty swiftly. So we're seeing some real bad seasonal action right now. We'll see if it turns around, but there's a lot of uncertainty. There's federal government shutdowns looming. The auto strike is accelerating. Is there going to be a recession? This whole rates higher for longer is weighing on the market. So, we just have to know that when bond yields rise, they compete for stocks. And, there's a lot of, really strong moves in some of the yields this week. So it's got a lot of pressure on stocks. All of this just creates a lot of uncertainty, and the markets really hate uncertainty. Clearly the market was expecting a pause and pivot message back at the Fed meeting. Didn't happen, and there's a lot of readjusting going on, particularly today, which is the end of the third quarter. So change of trend. There's really nothing showing a change of trend at this time. We're looking for a follow-through day. It'll take a follow-through day to try and change the tide. You should be building watch lists and analyzing charts. So start doing that as I showed you a little bit today. And after you've done maybe the quick hack, you'll have to go even deeper into those charts to really look for accumulation and signs of a constructive base. We still have accelerating net new lows. We're not above the 20-day. Breadth has not been good. So everything really on the chart is not good. So it really means you need to be cautious, very cautious here, and keep your exposure levels very, very low. Again, my experience is when you're in these types of corrections, 8 to 12%, you must have a follow-through day with some real power to ignite a rally that's going to last. So to wrap up, the Fed's quake is still rumbling through the markets. It's end of repositioning going on here at the end of the quarter. We did have extreme lows in the percent above the 50-day moving average, and net new lows are reaching levels from the prior areas of this year in 2023. So maybe we're going to get a little bit of a rally here and a bounce, or if it does roll over into resistance, we could go another leg lower. So we've really got to be open right now. It could go either way. This weak bounce attempt could roll over and oversold becomes even more oversold. Definitely a possibility. Or if we do get this undercut and rally and it generates a follow-through day, we want to be prepared with our watch list, and we want to see if that's going to work and if it's a really strong follow-through after the follow-through day. So we got to be prepared, even though things might look bleak and the news doesn't look too good right now. We want to do our preparation. Exposure levels should be very defensive right now, maybe 0 to 10% if you're probing something, but it's just not a good environment. So the quote of the week is, the easiest way to be wrong in the markets is to make predictions. We just want to do what we just talked about in this video. We want to look at the evidence. We want to interpret what's happening, and then be prepared if the market turns. We don't want to try and predict what's going to happen and place bets on a prediction. It's the surest way to be wrong. So take that in mind. Now, BlueSky6 registration has opened today, and I hope all of you take advantage of this. We have an early bird special that if you register for BlueSky6 between now and October 15th, you will receive the 2024 market diary that I've created, which has all kinds of interesting quotes, market data, market statistics, research studies that I've done with data and graphics. So it's pretty cool diary for 2024 that you can bind together. I'll give you the PDF. You can bind it and have really a calendar for yourself. So take advantage of that because registration will be going up after October 15th. So how do you register? Well, you can go to X. My Twitter X channel is RainKing at JPoco722, and I have a pinned tweet there that has the registration link. Please go there. Those of you that are part of the Boston IBD meetup mailing list, we're going to be sending out batches of emails that'll personally invite you to the event with the link. So look for those as well in the next day or so and try to take advantage of Blue Sky. It's a great group of speakers, and my pinned tweet shows the agenda with the speakers. So that's the general market update for September 29th. Have a really great weekend, everybody, and we'll see you next week.